Strong growth, a rising middle class and limited competition for deals are said to be driving interest in private equity in Africa. Graham Stokoe, African private equity lead at Ernst Young, joins me now to discuss the role of private equity for Africa's growth. A very warm welcome to you, Graham.
Great,
well, let's just start this conversation with some of the countries that have been taking the lead. We do see South Africa, Nigeria, Kenya.
Yeah.
They are always taking the lead. But then there are countries like Ghana that seem to be taking some of that spotlight as well.
I think Ghana is becoming increasingly interesting. It seems to be slightly more stable politically than Nigeria at the moment. And yeah, it's got also based to that West African front. So you've seen traditionally those hubs as being a starting point, but as they become more mature, more competition, people look to countries alongside, such as, let's say, Tanzania, Ethiopia in East Africa, Ghana, Ivory Coast in West Africa.
I want to talk a little bit about that political stability because we are seeing it more and more. And I remember interviewing somebody who was talking about a country like Zambia, for instance, that is traditionally known to be very, very peaceful. But one of the things that investors have had as a problem there is you don't know when it comes to policy changes, because it seems as though the policy shifts are quite huge whenever there's a new government. But then is that overcoming investor fear to come into the continent? Are the returns much higher than the fear that is out there?
The returns are definitely much higher than the fear that's out there, and I think it's again just an evolution of perception versus the actual realities on the ground. And if you speak to the mature private equity investors who've invested in Africa for the last decade, 10 to 12 years, I mean, they will tell you they've invested in Ivory Coast, Tunisia, countries that have been through turmoil in the last couple of years, but they've still realized or realizing good investments in those countries. So perception is a starting barrier, but it's, you know, you need to get on the ground and actually invest and realize what reality is.
And talking about that getting on the ground, how important is it to have the funds to be actually based in the countries that they're operating in? That you're not just speaking from an office here in Johannesburg, but you've actually gone to the country and you can see the opportunities that are there.
I mean, definitely. I think it's quite important to have the teams based on the ground. I mean, not necessarily a fund in each country, but definitely it's a big advantage to have teams on the ground in at least a region servicing a West African region or East African region. Obviously, you know, it may not be affordable or cost effective to have teams, you know, all over in, let's say, 6 African countries. So you need to decide on where the good bases are to invest from there.
One of the things I wanted you to explain a little bit more in detail, we see a lot of infrastructure spend across the continent. So that seems to be a huge attraction, but there's also the renewable energy. There's so many fronts in which that are quite traditional in terms of what's going on and how Africa is progressing right now. But one of the things that this research shows is that consumer-driven sector is very, very important as well.
I think it is. I think infrastructure is, you know, you can play a certain role, but it's quite fixed. You have to have, you know, relationships with government or other people providing investments. So it's a number of players. Where consumer products, you can really team up with an entrepreneur who's already, you've got a lot more ability to influence the returns, where infrastructure is, I guess, slightly maybe a safer investment, but returns sometimes a little stymied and low. But I mean, infrastructure is really key to getting that consumer growth, because obviously transporting goods and stuff around, you know, country to country, and a strong company in Nigeria becoming a player across West Africa, you need the infrastructure to support it. And infrastructure has probably been a limitation to African investment to date. But I guess as that infrastructure is taking place at quite a rapid pace, you know, the add-on investment and the more important investment is going to happen very quickly.
One of the things your company says is really important is, should firms focus on large-scale investments involving a limited number of transactions, or should they build a diversified portfolio with a number of smaller deals? And you say that is such an important question for the PE investor.
Yeah, I think it is an important question. It's probably a balance between that. You need a diversified thing to minimize your risk. You know, I've mentioned it is still a risk in that, you know, if you've got all your investments in Nigeria or all your investments in Egypt, obviously they could get hampered by, you know, I've only mentioned 2 countries, but whatever country, you don't know what's going to happen in the future. And having a diversified portfolio across a couple of countries definitely minimizes that risk, but it's also about, you know, not having too many investments that you can't actually get your hands onto them and really empower and make more influence. You know, I don't think you need more than 10 investments out of a private equity fund, one fund, because, you know, you need a team that can actually influence those investments and create really value add. Because the difference between private equity and then any other investors is really hands-on, really making a difference, being part of the board of directors, having an independent thing, increasing the corporate governance, you know, creating other acquisitions, relationships in other countries. So,
two things that are quite key, though, coming into Africa right now. It seems as though not a lot of competition when it comes to capital investment. So that's the one thing. And the other thing is for investors, particularly here in South Africa, that a lot of other African countries beginning to take that attraction, that investment attraction, whereas it used to be South Africa, but now so many more opportunities available on the continent.
Yeah, and it's not only throughout Africa. I mean, I'm speaking to teams in West Africa where it's actually a whole lot of Asian influence. So you got competition, a lot more competition from Indian, Chinese, other Asian investors, Brazilian investors. So, you know, the competition is increasing, but if we look at the past and we look at the private equity in the past and the number of opportunities, you know, and plus the valuations, you know, you're not seeing the valuations to the extent of India, Brazil, where we're talking double-digit EBITDA multiples.
Now, one of the things here in South Africa, for instance, Europe, a really big trading partner, but going forward, it seems as though there are going to be quite a few barriers there when it comes to just regulation in Europe, and particularly probably because of the crisis that has happened.
Yeah.
So the US, seeing as one of the countries to be investing in Africa, that it's much more easier for them in terms of opportunities to invest in the continent. Other regions, we've seen China, other regions that are able to capitalize.
I think it's going to be interesting to see. Europe is, they're definitely trying to regulate private equity a lot more, and that's going to be interesting to see if you just get US focused funds, you know, purely out of US investors or Middle East and Asian investors. So we'll see where that Europe regulation ends up. It's, you know, I think a lot of it's coming on track only, I think, next year, and it increases as it goes by. So it's still not clear how that actually is going to play out.
A bit of a concern, PE has yet to achieve significant penetration to the economies of sub-Saharan Africa. So if we compare that to BRIC countries like Brazil, like China, like India, huge growth there. But then when we come to sub-Saharan Africa, extremely minimal if you were to compare it to those countries.
Yeah, saying that, that's one of the opportunities, and that's the decreased competition and the valuations aren't as much. And I can't see it keeping that way. I think it's going to be increasing percentage of GDP investment, and I think it's going to be an exciting place because of that, because it is one of the last frontiers where, you know, the growth is there. You can go and see the GDP growth rates across the big countries. So the growth is there, the opportunities are there, but there are challenges. It's getting management skills, getting the right opportunities, getting the corporate governance in. So it's not, you know, I wouldn't say it's plain sailing. It's definitely, there's not as much debt capital but PE in Africa is different to US or Europe. It's really about growth capital. It's not about leverage.